What is support and resistance? Let's understand this concept as we go on. Now, some of the weaknesses of technical analysis, yes, it's this art. It's not a calculated move. So it's an art, and every analyst looks at the chart in a different way. Some may find that this particular stock is not that good for buying, but others may find it very good for buying. The entry points are different. The exit points are different. The breakouts at times are different. So it's an art and not a particular science, which is a weakness of technical analysis. All analysts will not give you the same view all the time. Again, technical analysis sometimes is said it's a bit too late, and that is sometimes. Most of the times, it's predicting the prices before that particular event happens. Okay. Now, also, that technical analysis doesn't take into account the fundamental factors of the market. That is the balance sheet, the PL. It only goes through the price charts. So that is another weak point of technical analysis. Okay. Now let's understand some very, very important topics of Dow theory. Now Charles Dow has developed a Dow theory, which is called the basic tenet of market. Now what does the Dow theory mean? The Dow theory has given some principle, or Charles Dow has given some principle on Dow theory. Let's understand what these particular principles are. One of the principles is the primary movement of the stock. The very first important thing you need to look into when you are doing the technical analysis is trying to find out the primary trend of that particular stock. When I talk about the primary trend, it means a trend which is in place for 1 year or more. So the movement or the particular price movement which is there for 1 year or more is called the primary trend of the stock. So suppose I say that the stock price last year was 250 rupees. Now the stock after 1 year has become 310. That shows that wherever the price was last year, the stock has moved way above that, and the stock is in a new zone than where it was last year. So we say that the stock is in a primary uptrend. When the stock is in a primary uptrend, we say that the stock is very good for buying. There are a lot of there is a lot of demand for that stock. The supply is less. So whenever there is a correction in that stock, you should look for buying that stock. Again, if I say that a particular stock was at a price of 250 last year, but now the stock price has become 200 in 1 year, then we say that the stock is in a downtrend. The stock has given a correction, the supply has been more than demand, and this has been a weaker stock in the market. So when it's a weaker stock in a primary downtrend, the more the time frame, the better the analysis. But at least for primary trend, we need to take 1 year, 1 year or more. So if the stock is in a downtrend for 1 year or more, that shows that definitely there has been some bad news in the stock, or maybe the results have not come well, the sector is not in flavor, or there is some XYZ news because of which the stock has been performing. So in that case, we need to look for shorting that particular stock whenever there is a bounce back. Now, whenever it is in a trend doesn't mean that it always will keep moving up and up. A stock in an uptrend doesn't mean that it will always keep moving up and up. It also tends to sometimes give a short correction. A short correction is the best buying opportunity for that stock, which is the concept of swing trading, you are going to learn as you read books, as you are going to practice more of. Okay.